Welcome to class, everybody. Welcome back to class. So today is day 11 of our 2 weeks intensive technical analysis class, and I'm very sure that some of you have picked one or two. If you've not grabbed everything, but you've at least grabbed one or two. And I can see some people sending their results to my DM. They are already seeing results. They are already analyzing the market. A lot of thank you. Well, everything is all thanks to God. So I still want to teach you about this smart money concept again, because that's the strategy that I'm using and it is working for me. The majority of people now are using smart money concept. And for smart money concept, the major thing that we used to enter market with, 70% of what we used to enter market with is what? Is order blocks. And some people, they use what? Fair value gap to also enter the market. But what do I tell you yesterday? I said that I just use fair value gap to confirm if the market is really going to come back to my order block or not. Because fair value gap is like is a gap, is a void, is an empty space that is an imbalance. The market is not balanced yet until market go back there to go and fill that place. So once market fill that space, once market fill that void, once market fill that gap, what will happen? The market will now continue moving in the original direction that it is going. Do we understand? Do you all understand what I mentioned about fair value gap? And I told you about order blocks. I say we have order blocks. They are like the other blocks are candle. It is a candle. It is a candle that shows us an hint, that gives us an hint that, okay, this impulsive move that happened was what? The footstep or the footprint of what? Of institutional traders, of banks, of financial institutions, of governments, of major banks. Do you understand? So as a smart trader, what you should do is that since they are the big boys, you have to give them the honor, give them the kudos, give them the respect. So anywhere they step, you step there. Anywhere they don't step, you don't step there. If they are going to point Z, you don't enter at point Y. You don't enter at point W. You wait for them to enter at that point Z that they want to enter. Because if you enter before they enter, they will use you as liquidity. They will use you as a food. They will use you as a prey. Do you understand? So when we get to liquidity, I'm going to teach you about liquidity and all these liquidities that I've been talking about. Actually, liquidity class is a 3 class. I used to use 3 class for liquidity, meaning that is at least we are spending 3 hours on it. Do you understand? Because once you understand where the liquidity is, then you won't serve as the liquidity. So you have to respect the liquidity so that you won't serve as a what? As a liquidity. Do you understand? But this one that we've done so far, we've already covered like 70% of what SMC is, of my strategy, of how I trade. Do you understand? So the next thing, we complete the other topics such as entry. How do you enter the market? Though I've been teaching you how to enter the market, but what I'm teaching you right now is a raw approach to entering the market. Now, once you don't identify how to enter the market, later you now be using your own, like to prove that you're a professional trader and also to make sure that you maximize your profits. You now start refining it. You start reducing the amount of the way you enter the market. Do you understand? So when we say gold, there is raw gold and there is a refined gold. When we say petrol, crude oil, there is crude. There is raw crude oil and there's a refined crude oil. Do you understand? So if you see a gold, the fact that it has not went through fire, it has not went through refinery, doesn't mean that what is not something that is valuable. Doesn't mean that it's not something that is important. Do you understand? If you see crude oil, it has not been refined, doesn't mean that it's not the crude oil. Doesn't mean it's not the money. Do you understand? So this other block that I'm teaching you, that's the basics. Once you understand it, you are already good 70%. That's why I still want to emphasize on it very well. Now I've taught you guys fair value gap. I've taught you guys order block. I've taught you guys market structure. I've taught you guys Fibonacci retracement. Do you understand? So you just be applying everything together. You'll be applying it. By the end of this class, you are going to know how to combine all the things together. As I've told you earlier, and as I've told you before, that what we do is that I'm trying to connect to give you the dots. I'm trying to lay the bricks, the blocks, one after the other, so that if you understand everything, you'll be able to use it to build an empire for yourself. You will now be the one to decide: is it bungalow I want to build? Is it skyscraper I want to build? Is it story building I want to build? Is it a mansion I want to build? Do you understand? So the bricks, we are already laying it down. And also, if you see a skyscraper, if you see a lift in front, you already know that, okay, this is what they use the lift for. This is the reason why the lift is down and the lift is not up. This is the reason why they put the step here. This is the reason why, I don't know if you guys are getting me. This is why they put the AC on top. This is why they put the fan on top. Why? Because you understand each and every aspect and each and every point that they brought together, each and every unit that they brought together to become what? To become one. Do you understand? But if you can't appreciate the beginning of something, if you can't appreciate how this one came to this one, how this one came to this one, you will not be able to even explain it to other person. If they say, why did you take this straight? You can't explain. That's why some people used to have problem in school. Some people used to have problem in class, in maybe your university or secondary school days. You have problem. Do you know the reason why? The reason why is that you don't know. They just say this one is this one. You cannot argue it. You cannot. You don't even know. They just say this is it, and you should take it like that. And that is the reason why, if you are somebody that is to take note of, pay attention to details, and you have this curiosity mindset, you'll be very good in mathematics. Because if they say x equals to y, find the value of y, and you say y equals to 2, you already know how you to identify it. Is it substitution reaction they use? Is it quadratic equation they use? Is it, if you can be able to solve it step by step, you'll be able to understand it. Am I making sense?
Yes, sir.
Yes.
Thank you. So now, I've already taught you guys everything. Do you understand? So today I just want to do a recap and like a revision, and also to show you one step by step how I take my trades. Do you understand? I try as much as possible to look for how to take the trades. Do you understand? So it's not every time that the market respects other blocks. Do you understand? So we use other things too in the market. Do you understand? It's not only other block that we use. Do you understand? But if you see other block, then you should know how to trade it. And if you want to be using other block, then you should know how to trade it. Do you understand? So yesterday I taught you guys that we have two types of other block. You guys can just be telling me it's a revision class today. Do you understand? So we say we have what we call market structure. So what are the three components of market structure? The three components of market structure. Oh yeah. Everybody should be able to talk. Let me try as much as to unmute everybody.
Support, resistance, and trend line.
Support, resistance, and trend line. If the market is at support, what does it mean? If the market is at support, once price get back to that place, what will the price do?
It will pump.
It will bounce back up. What of resistance?
Short.
It will dip, which is the opposite of support.
It will dump.
Exactly. Once market gets to that place, the market is going to come down, right? So what of trend line? What do we use trend line for?
It shows how the trend is currently.
Thank you. So we can either be in three phases. What, and what?
Uptrend, downtrend, and ranging.
Thank you. So we can be in uptrend
or consolidating.
Ranging market. Thank you. Now, if we are on range market or consolidating market, what do we do? Do we long or we short?
You just wait. You have to be
For a break of structure.
You don't trade. Do you understand? You don't trade. You wait till maybe the markets go uptrend or downtrend. If you are in uptrend, what do we do? If we are in
long
uptrend,
the market.
You should be looking for what? A long opportunity.
Long.
If you are in downtrend, what do you do?
Look for the market to short it. Shorting.
short the market. Thank you very much. So so that is that about that. So that the rule of trading of trend line is that what if we always what make trend your friend, follow the trend. If you are going up, you should be looking for long opportunity. If you are going, you should be looking for what short opportunity. Support. Once market get to support, we are expecting that the market should bounce back up. Once market gets to resistance, we are expecting the market to come down. Do you understand? So after that, we move towards Fibonacci retracement. We move to Fibonacci retracement. So I said Fibonacci retracement, we use it to find entry too, right? And in the Fibonacci retracement, I told you guys how to set it. I gave you the settings. If you don't know how to set it, go and check the video on YouTube. It's very simple. Do you understand? So what do we use to enter? What do we use to enter? Let's say, see my own now.
We use the premium zone.
Yes. So for the
discount zone.
Premium level.
Yeah, the premium and discount. Thank you. So to draw your support or resistance, I say you use what horizontal to draw support and resistance. You use what horizontal to see. This is the resistance. This is the support. Do you understand? If we have a market inside like this, something like this inside like this. So, am I making sense?
Yes, sir.
So now for the Fibonacci, Fibonacci retracement, I said you should know how to set it. I've known how to set it. I've drawn it out now. This is 0.5. It still means 50%. What do we use it for? It's the one that differentiates if we are in what? In premium or what? Or discount. If the market is in premium, when we say premium group, premium channel, what does it mean? It means something that is paid, something that is important, something that is expensive. Do you understand? So the price is what? High. So you should be, if you are holding something and you want to sell that thing, where will you want to sell it? When the price is still what? High. When the price is still expensive. Do you understand? So anything on top is what is referred to as what? Premium. So you should sell at premium and discount when the price is still low. When the price is still low, everybody wants to look for discount. If you say they are selling something for discount, everybody will quickly want to rush it. If they say there is discount for first 10 people, you know that 10 people, the people will quickly rush it. What will you do? You quickly look for ways to make sure that you enter at that discount price. Do you understand? So that is discount. So what should you be doing at the discount level? You are trying to look for a long opportunity. You are looking for a buy opportunity. Do you understand? So that's that about that. So this is 0.5 is the one that separates premium from what? From discount. Now, if I want to use Fibonacci retracement to long the market, what do? I will start from what? From down. I will start drawing from the swing that is down to the what? To the swing that is up. Do you understand? To the swing that is up. Then where will I now place my rectangle from the what? I will trace from the what? 0.6 what? 618. And I will place my thank you. Then my stop loss will be a little bit what? Below the what? 0.7. Thank you very much. You guys are doing well. Then to short the market, where will I start from? I will start from top, right? Let's say I see this swing. I'm coming. Sorry. I see the market that is swinging down like this, swinging down. And I want what? I want to short the market from 2. I don't FOMO. You don't FOMO. You don't just jump into the market because everybody is jumping. No, the market will later come and meet you. So look at this place. Just what? Change it to the what? To the lowest. From the highest swing to the what? To the lowest swing. So you are expecting the market to what? To come back to the what? 0.618 to 0.786. Then you put your stop loss a little bit what? Above the what? 0.786. That's how we draw the Fibonacci retracement. So what do we use the Fibonacci retracement to do? See the way the market is pumping like this. You don't just enter. What if now here you enter? What happens? The market now starts coming down. You'll be in loss. Do you understand? So just wait. The market will come and meet you too. Everybody will enjoy this market. You understand? So that's how it is. Guys. So after that, we talked about retail trading concepts. We said the retail trading concepts, what they just depend on is what? Is market structure and what? And indicators. Abi? We said they just use market structure and indicators. So one of these days we are going to talk about indicators too. Do you understand? There are various type of indicators, a lot of indicators, but I'm going to teach you the ones that are still working. You understand? The ones that are still working. So that's about that. So we know market should, then we now move to SM. Then I told you the reason why everybody is moving to SMC now. The reason why everybody is using SMC now. I told you the reason why. After that, we now talked about the tools that the SMC people use. What are the tools that the SMC people use? We use market structure. We use Fibonacci retracement sometimes. But most importantly, we use what? Order blocks. We use order blocks. Other thing that we still use, we use liquidity. We use liquidity too. Then for me, that I'm using the key strategy, keeping it short and simple. At times I combine some indicators too. You understand? I just combine indicator with SMC so that I will be an edge. I will have an edge over other traders. Do you understand? So now, from majorly, that's what we use. And I said the order block. We have two types of order blocks. What and what?
Bearish and bullish.
Bullish order block and bearish. Bullish.
Use bearish order block for? What do we use bearish order block for?
Bearish order block.
Bearish order block to short
the market.
We use it to short the market. What do we use? Because from the name bearish, what do we use bullish order block for? What do we use bullish order block? We use it to long the market. What is the now? This one is very catchy. What do we use? What is the color of bullish order block? What is the color of bullish order block? Red candle. What is the color of bullish order block? What is the color of bullish order block?
Red candle.
Bullish order block.
Red candle.
red.
I'm thinking that maybe one person will actually miss it. It's red. So now, what is the color of bearish order block?
Green color.
Green.
Yeah. Green. Thank you. Now, yes. So how do we identify where an order block is? Where are they always located? Order blocks. Where are they always located?
Impulsive move.
For the massive move.
Impulsive move. Thank you very much. You guys are getting, it's an opposite candle before the word impulsive, and it's telling us that there is a what? There's an hint. It's giving us an hint that what? This thing that you are seeing is by what? Is by what? Is by government, major banks that did this move. And since we all know that they are the what? They are the market movers. We call them market movers. They are the big boys in the market. So you don't fight them. Instead, you what? You follow their footsteps. Now, person will get money, you suppose they follow. That's how the law. That's how it is. It is even in this life. If you see someone that is broke and someone that is rich, who will you fight? Obviously, it's the person that is broke now, because you know you cannot earn anything from the person, but you don't want to fight a rich person because that rich person can do and undo. You can sue, you can do anything for you. Do you understand? So that is that. Now, we now say that impulsive move. You all understand how to see impulsive move, right? You will just see it. It will be so glaring on the charts. You will just see green, or you can see red. Do you see? So that is that. We now move towards the forms of order block. What are the forms of order block? Tradable
order block and non-tradable order block.
You guys are hot. You are really hot. I like that. So we have tradable order block and non-tradable order block. What are non-tradable order block? Non-tradable order block, it means that what? Most of the time they will always get invalidated. Do you understand? But tradable order block, even if they are going to get invalidated, there's no how the market will react to it small. You can now later go and break it too. You understand? But the market will react to it. Then I still talk about what are the other terms that I still talk about. Features of the what of a tradable order block. I mentioned some of the features that you must consider before you can see this one is a tradable order block. Let's say you see a bullish order block now, you want to use it to long. You are now seeing a support. You are seeing a support below the bullish order block. It means that you should not take that particular trade. Instead, you should look for an order block that is sitting on that support or a little bit below that support. Do you understand? Do you understand? Because one thing that it is that you don't want to be a what? You don't want to be a liquidity to the market. You don't want to be a food to other people in the market. Do you understand? You don't want to be the prey in the market. You want to be a predator in the market, always collecting other people's money. Do you understand? So that is that. So after that, we now move to what? We still talk about that another block. There will be a preceding fair value gap. There will be a preceding for a tradable order block. There will be a preceding what? Fair value gap. And I told you what fair value gap is. I said just from the name, they are gaps, they are void, they are spaces, they are imbalances in the market. And once you see it in the market, it means price will definitely come back there to come and fill it so that the market can be balanced. Do you understand? So we'll talk about that one too. So now some textbook might call fair value gap for you imbalance. Some textbook might call it inefficiency. Some channels, some traders can call fair value gap imbalances or what? Inefficiency. It's still the same thing. And the abbreviation for that one is what we call FVG. Is what? FVG. After that, I still talk about that a fair value gap must what? There must be a break of structure. There must be a break of structure. And yesterday I was able to identify as much break of structure, as many break of structure as possible for you guys. And you guys also, we did small classwork and you guys actually got it, and I'm okay. I'm actually happy. Is this a break of structure? Is this a break of structure? Is this a break of structure? It's not a break of structure. Thank you. Thank you. You guys are doing well. You guys are doing well. Is this a break of structure? Is this a break of structure?
Yes, sir.
Thank you. You guys are making me happy. Is this a break of structure? Is this a break of structure?
Yes, sir.
But you guys are making me happy. Now, if you have a break of structure like that, you've seen an impulsive move. What is the next thing after you've covered this place? What is the next thing you quickly go and do? What is the next thing you quickly go and do? You come down to come and pick the what?
Other blocks.
So to long the market. So what you are expecting is that as the market is coming back, it can do zigzag, it can come straight. One thing that you are sure expecting is the market to tap this what? Rectangle, and the market should go back up. That's your profit. Do you understand? So that is how it works. That is how it works. For downtrend too, let's look for downtrend too. For in the downtrend market, we want to short the market. So the market came like this, it came down. It went up, it came down. It went up, it came down. So what is this one telling you? Is this a break of structure? Is this a break of structure? That is not a break of structure.
No,
Thank you.
no.
Is this a break of structure? Is this a break of structure?
No, sir.
No.
Oh.
Not a break of structure. Is this a break of structure?
Yes.
Yes, sir. Yes, sir.
So you always consider that thing that did the break of structure to your right hand side. Do you understand? To your right hand side, that the one that is on the right hand side it must be the one that will break the structure. Do you understand? So look at this place now. It's the one that break the structure here. Is this a break of structure? Is this a break of structure? Of course, that's a break of structure. Of course, is this a break of structure? Of course, that's a break of structure. Now, if immediately you close your break of structure, what's the next thing you go and do? You go and find your other block. You look for another block. You are expecting the market to do zigzag to enter this place back, and the market should what? The market should sell. The market should sell. You see it like that. So it is as simple as that. What is the other thing that we still talk about in in features, we said that there must be a preceding or there must be what? Liquidity. That liquidity is a 3-class. It's a 3-class. I don't know how we want to do it. This is day 11. This is day 11, and I want us to have, I'm doing revision for us so that we can do practice, because I will have to create a group so that everybody will join the group. Then you will send your work inside, maybe like 2-2 or 3-3. Let me assess you. Let me know if you guys actually know the practical too and not just the theory. Do you understand? If you guys, because one thing that you must know about this trading is that you need to practice it. We get better by practicing, not by knowing it. Do you understand? If you know it, you know how to draw it. You are a graphics designer. Can you trade it? If you can trade it, you are a trader. You understand? So that's how it is. Then we did some example. We did some analysis together. Do you understand? So I'll still show you some of my past charts. Do you understand? So that we can check it together. And I told you that, okay, some of my students, like their results. Because one thing I know is that another thing that I need to tell you is that it's not every time that market respects break of structure. There will be the market respects other blocks. There will be some times that you see that the market is not really respecting other blocks. The market might be respecting liquidity at that time. The market might even be respecting just support and resistance at that time. That's why, as a trader, we are always students of the market. We learn consistency. We learn every time, every day. Nobody can say you don't arrive. No. You always learn. Can you guys see this screen? Can you see my screen?
Sir, we can see it, sir.
If you look at this thing, this thing is not showing very well. If you can look at it well, you see that this is a break of structure. There's a break. I see another block there. I placed the market went back there to come pick it. Can you see? If you can see it, you can still see another break of structure. See the other block here. Can you see that the market tap it, and the market is about to go back up? Do you understand? So there are some times that the market, they will respect them very well. That you said you will be shocked that what is this? Can you see? There's you guys cannot see this thing very well. You cannot appreciate it very well. If you see this thing, you will see another block here. Can you see that the person placed it there and the market came back there, it picked it and is in profits? Can you see? A lot of profits. Can you see? All these ones that you are seeing was printed by other blocks. All this thing was printed by other blocks. That's what I'm telling you, that if you know other blocks, you've already known 70% of SMC, about to trade SMC. You already know it. The other things that, okay, how can I be so that I can constantly stay profitable? Do you understand? I can constantly stay profitable. That's when you will still add other things. You will add risk management too. Risk management too is very, very important. If you join some signal group, they will give you trades because they always want to be correct. So they will give you trades. The trade you might win 5 trades. By the time you are winning the 6th trade, by the time you lose that 6th trade, it will wipe all the profits of the 5 trades. It happens because they always want to be in what? They always want to be in on the right side. You can see OG like this thing, they work. They work like, this one no be shere. Do you understand? So they work. Other block. Just sit down and master it very well. See one of my students just in 31/7 to 15, just 2 weeks, he made $2,900. The win rate was 81%. He's one of my students, J-Man. If you know him, he's one of my students too. So it's simple. It's simple, guys. You just need to sit down, study the market very well. Do you understand? So you need risk management too. Now let's look at this thing together. This first trade now. This is the current market, what I'm currently on now. This is what I'm currently on. How did I pick this particular trade? How did I pick it? Look at it, guys. Are you guys with me?
Yes, sir.
If you look at this place, can you see that there is a break of structure here, right? You can see that there's a break of structure. I picked the other block, right? So can you see that the market came back to come and tap it, and the market is selling? Now, I want to tell you guys something. Anytime you see that the green candle is low a little bit compared to this particular red candle. Do you understand? Like the preceding red candle. Just make sure you pick the red candle. Just pick any side from that rectangle. Do you understand? Do you get me? Do you get me? So you can adjust it.
Get you.
Look at it now. You can see that this is the green candle, right? This is the green candle. And see that this red candle actually sold past it. Do you understand? Like it's sold past this particular place. Do you understand? So what you should do is that you should use this red candle instead of the blue candle, the green candle. Do you understand? So you should use that one instead. Look at it. I've used that one, so I can be able to still move my entry back up. Can you see that the market still come back to come and respect it? So that is this one will give me avenue for me to reduce my stop loss. Do you understand? Yeah, that's it. So look at this place too. You can see that there's a break of structure here. You can see that there's a break of structure here. True or false? There's a break of structure here. That's number one. Number two is that I'm going to pick my order block. This is my order block. This red candle before this impulsive green candles. That is my order blocks, right? The next thing is that is there a fair value gap? You all can see that there's a fair value gap here. You all can see. Look at from here. You all can see from here. This first candle, second candle, third candle. You can see that there's an imbalance there. Do you understand? In this particular place, what do we know? The market will come and feel it, right? The market will come and feel it. So this one might actually take time before it will peak, because if the market feel it up to this place, there's still a lot of distance it needs to come before it can feel this one. But one thing you should know that you can be forming something that you can know that this thing will actually come and hit me. Do you understand? So that's another analysis. That's another analysis I've done for you guys. That's another analysis I've done for you guys. Please, guys, don't make noise. Please, guys, you are making noise already. So that is another analysis I've done for you guys. That is it. Look at it. I will just place it here. Do you get? So I'm waiting for the market to come and pick me. That is how it is, guys. That is how we analyze markets. Now look at this one. Look at this place, guys. You can see this is another thing. This is a support. This is a support, guys. Abi, this is a support that I drew. You will see it, or that later you see it. Now, after you see this support, look at this place, guys. Look at this place, guys. You can see that the market came back up. It came down. Then it went up. Look at the impulsive move, guys. Look at the impulsive move. You can see that there's a break of structure here, right? There's a break of structure here. Do you agree with me?
Yes.
Do you agree with me? So break of. Then once I mark the break of structure, what's the next thing I will do? I will come and mark my order. Did the market come back to come and respect it or not, guys? Can you see
the
it?
market respected it.
It's coming back.
You can see that all these things that is happening is not just by coincidence or something. Once you understand how to do your markets, your team, see the profit, guys. See the profit, guys. Can you see it up to the upside? Can you see? That is how it is. I can be showing you all these charts. We just turn to. We will not even see what I'm drawing again. I swear. The reason why I will not advise that we should pick this one. This one said is an order block. Look at it. It has broken this place already. Look at it. This was the highest before. See, this was the lowest before, right? This was the lowest before. You can see that it has broken it. It has broken it. Yes. What's the next thing? You pick your order. This big candle, this breaking candle, you pick it. Do you understand? But the thing is that it's too big. I will teach you later how to refine all these things. Do you understand? So if you are able to refine it, you should enter the market from this place. Can you see? You can still see small profits before the market now reverse. Do you get? So look at this one too, guys. Look at this one too. What did I tell you? But I will not trade this particular one. I should have placed it here. You see that I should have placed my entry. You know, I told you that if you see green like this, just use the red one as your entry, right? Instead, Abi, Abi,
Yes.
can you see that?
I mean, you are using just the wick of the red one.
Can you see that the market came back there and the market sold? But the reason why I'm not going to trade this one is because of what? Why? And I need a smart student. The
Because
reason
we
why
are in
I'm
an
not going to
uptrend.
no. The reason why I'm not
So
going to trade is that there's
that's
break. Look
it's
at it.
not needed.
See, there is no break of structure here. No. There is no break of structure here. Look at it. This was the highest before. This was the lowest before. Look at this red candle. It did not take out this particular one. Do you get? So that's why I'm not going to take this one. Do you guys understand it? See now. See this one. There is no break of structure here. There is no break of structure there. Can you see it? Look at it. This was the lowest, right? Unable, this red candle that did impulsive move was unable to break this one. So I'm not going to take that one. Do you understand? Do you understand, guys? Eh?
Yes. Yes. But
Yes.
let's
Hello.
how do you go about time frame correlation?
Eh?
Time frame correlation. Since the 4 hours candle is too big, if I want to take an entry, how do we refine it?
That's refined entry. We never reach entry. Like
Okay.
we never reach that. But you can do it, Sha. What you just do is that instead, like, look at it. You know, I told you that inside an other block, I said that another other block they inside.
Yes.
Do you understand?
Yes.
Just go to, once you go, look at this one that I mark now. This one that I map, you should be worried or not to over refine. This one that I map now, if I go to 1 hour time frame, it will disrupt a lot of things. I will talk to you about that one later. Just remind me. You understand?
Okay.
I think we've addressed this one too. This one too. Look at this one. Look at this one, guys. You can see that this thing is sitting down on a support. Look at the break of structure. Can you see? Did the market come to respect it? You can see that the market came back to respect it. Now, I will use this one to do this thing for you guys. Refine entry. So that's how it is. We can see a lot. This one I'm just looking at, just sitting down and just looking at it, analyzing it, and I'm seeing what I want to see. Look at it. The market came down, then it started going back up. Right? Then you can see that this red candle, this red candle is more than candle, right? What will I'll just pick the wick of the what?
The wick
of
of the
red
candle.
candle.
Yes.
I'll just pick the wick of the red candle.
What's your advisable RR? Risk to reward ratio?
1:3 is okay. 1:3.
Okay.
Can you see the profit I've been unable to accumulate to myself still? Can you see? That's some things that we call refined entry. Do you understand? I can still refine this one too. Do you understand? You can be able to reduce your stop loss. Can you see the profit, guys? Now still look at this place too. Guys. This one safe. See, there are plenty. You see that this was the lowest before, right? This was the lowest before, right? Now, the market went up, then the market started coming down. Now, after it created this green candle, there was an impulsive move down. You can see some red. Do you understand? This is a what? This is an other block. This is an other block. This one that you are seeing here is a what? Is an other block. Now, what happened? Can you see that the market came back there? And what the market sold? Can you see that the market came back twice safe? Can you see? So you can pick anyone you want to pick. And the market what? The market sold. Can you see? That's some profit there. So can you see it, guys? So that is that about that. Can you see that's that about that? Now, because this one now, the break of structure will just carry it. What is the lowest one before? See the lowest place before. And now it has broken it. Just carry it from where it's the lowest to the one that broke it. Do you understand? That's what the break of structure there. Do you get? Now look at this place. You can see that there's a break of structure here. Look at this one was the lowest. The market went back up, then it still sold back again. what do? You just pick the green candle. Can you see that green candle in between? So I
Yeah.
picked that green candle. Can you market tapped their place and the market sold massively? Can you see? Can you see, guys? Can you see, guys? Can you see, guys? So look at this thing now. Look at this place. You can see this was the lowest. The market went up, then the market sold massively. The market sold massively. Just pick your green candle. Do you understand? Now, if you see something like this, you can see that there is still some small candle in between before the green candle. Instead of just picking this green candle, you can pick this green candle only. But make sure that you are protecting these two candles. That is just like, because they are very close to this particular green candle. Or better still, just carry the one that is on top here like this. Do you get? Can you see that the market still respects it? You can do anyone that you like. Do you understand? I'm doing refine for us as they go small too like that. Do you see? That is it, guys. Now look at this one too. You can see that this was the lowest before. The market has broken it. You can see that this one too is the what? Is another block. But you can see that this green candle, this red is actually greater than the what? The green candle. So I will just pick the wick of the what? Of this green candle. So that's how it is. So did the market later respect it? Okay, the market did not come back to respect it. The market has not reached that place. So that is why you'll be seeing some people that will be calling Bitcoin to 72,000. Look at Bitcoin to what? To 72,000 or Bitcoin to 71,700. It's because of what they are seeing on the chart, guys. Do you understand? It's because of what they are seeing on the chart. Do you get? So that is how it is. That is how we trade it, guys. That is how it is. So look at this thing now. You can see that this was the market went up, came down, went up, came down. There's a break of structure here. Look at this was I can pick this one as my low, my highest before, or you can come down, can't say this one is your highest, or this one, anyone that you want to do, but you don't see that there was an impulsive move. What happened? The market came back to that place, and the market bought. Do you understand? So that is how it is. A lot of it, you see a lot, guys. A lot. See this one now. This one, I will carry this one. This is my a break of structure. This is a break of structure. I can carry it from here, right? And say this is This is a break of structure. Then carry my rectangle. Carry my rectangle and map out this particular one. Let me just use this thing to map it out. And map it. If the market respects it, it went for a very long time. Can you see that the market still later comes to respect it, guys? Can you see? I don't want to draw that rectangle. I think I will still have to draw it so that you guys can understand it better. Can you see? You see how I'm doing it so that I'll be able to so that I will not interrupt it. So this one was selling, so the buy was so aggressive. Do you understand? That's why you have to sell past it. But they know that this place we need to calm down. Do you understand? So the other block we first respect it first before you can now do anything with it that I want to do. So that is how it is. I've shown you as many examples as possible. So that is how it is. Do you understand now? Do you understand what other block is now, guys? Do you understand what other block is?
Yes.
Yes.
And I was able to still go to Instagram. I was just scrolling through Instagram. I just searched other block. I just search for other blocks. See other block. I just search for it so that I can see other people too, how they trade the other block, and if it is really working. I search Instagram. I search TikTok, everywhere. Do you understand? I was able to see a lot. Look at this thing now. What is this person telling you? Can you see that there's an impulsive move? Then there's is candle. This guy is using black and white. Can you see that? This is a white candle. This is a black candle. This one is an impulsive. There's a break of structure. He picked the other block. Did the market come back to respect it or not? Of course, the market went to come and respect it. Even in both people or in both person.
The market respected it 3 times.
3 times. So can you see? Even in both people know that this is how to trade other block. Do you understand? Now, see another person now. Financial stability effects. Let's look at how the person is trading his thing. He said he will enter here. Can you see there's an impulsive move? carry the other block. Did the market come back to respect it or not? Of course, the market came back to respect it. Do you understand? Look at same thing. The one that it did not even take safe, the market respected it. Look at it. There's a break of structure here, right? This was the lowest. Then the market went back. Then the market came back impulsively, break this particular structure, right? There's a break of structure here. It carried this green candle. What happened? The market went back up to that place and the market sold. Do you see it, guys? Do you see it, guys? This is another one. This is he's not even marking as much as possible. He's just using only one. Whereas me, I've seen 3 opportunities to say to make profit. He just pick only one. I've seen 3 opportunities. There's a break of structure here, right? He even mark it out. There's a break of structure here, right? This is an impossible break of structure. Where is the green candle? Can you see that green candle? What did the market do, guys? Can you see that the market printed to that place and the market sold massively? Do you see? All this big drama. All this big drama. You know, I told you, my strategy is KISS, keeping it short and simple. All this big strategy, nothing concern me. Do you see now? That is how it is, guys. That is how it is. This is another opportunity. Him is just mapping out, okay, me, I will not take this one as break of structure, but he took this one as break of structure. This is an order block now. Can you see that? If you trace it, if you can be able to trace it, you see that the market actually tap it before the market did this up that this market did. So that is how it is. See another one. Here Forex one. Can you see that it's the same way they are trading it too? See, this is an order block because can you see an impulsive move, an order block? Can you see the market came back, the market tapped that place, and the market went back up? Do you understand? So that is how it is, guys. Look at same thing. Now change of character. This choke. You know, I told you that some people will be putting choke. Choke is telling you that, you know, this thing is selling before, is now trying to buy. Okay, there is a change of character. We should be looking for long opportunity. But what did I tell you yesterday? Nothing concerned me with what? With big dramas. I'm less concerned about big dramas. Everything is what? Break of structure to me. Is this thing a break of structure or not? See an impulsive move. This was the highest before. The market has broken it impulsively. That is what? A break of structure. Right? Carry your what? Your red candle. What happened? Did the market come to respect it or not? Are you guys seeing what I'm teaching you now?
Sir, wait. I don't understand. I don't understand this part. This part here, this main picture.
Change of character.
You don't understand change of character?
As you are explaining this main picture, I don't understand.
See, anything called change of character. We are in downtrend before. The market now changed back to uptrend. That's change of character. For, let's say we are in uptrend before, the market now switched back to downtrend. Is what we refer to as what? Change of character. But everything, the market we did break of structure. None. The structure that we are doing before is up. Now the structure has been broken. We are now in down. Do you understand? So don't stress yourself with too many grammars. Shebi, you shall know that this is a break of structure based on what I've been teaching you. So it's the same thing. The same way they trade change of character. It's the same way they change break of structure. So why will I now be saying this one is break of structure, this one is change of character? Do you understand? So that is how it is, guys.
Yes.
That is how it is. Look at it. There's a break of structure here, right? There's a break of structure. It carried the green candle. Did the market come to sell or not? The market came to sell. This one is FX Amol Kumbar. This one, I don't even know this thing. So can you see? There's a break of structure here. It carried the order block. Can you see that the market came to sell, to buy it? This one is gold USD, spec trades. Let's see how this one is trading its own strategy. Can you see that there's a break of structure here? You know, I told you something about everybody using different names. MSS. MSS means market structure break. None. Do you understand? It still means market structure break. Some people can say MSB. It's still the same thing. Market structure break. It still means BOS, BMS. It's break of market structure. Break of structure is the same thing. Can you see? Your own is to understand what am I trading. All this big drama is no concern you. Do you understand, guys? Do you understand?
Yes, sir.
So this one, we said refined order block. The reason why I call it refined order block, you know, normally if you want to draw order block, You suppose carry it from this the top of this red to the bottom, right? But it was able to refine it. Refining is just that maybe you see your entry in 4 hours, you see the other block in 4 hours. You just go and pick the other block in 2 hours or 1 hour. But you will have mapped that other block out. So you just go and look for another block inside it. No, inside that other block, another block there inside. This one is Winstar Forex. See this Winstar Forex now. See what I told you. Different name, big names, so that you think that this thing is difficult. You know what fair value gap is? Can you see that there's a fair value gap here? Okay. It means that the market will come back there. Now look at this one. CH or MSS is saying change of character or market structure break. Is it not break of structure? See impulsive move. CIS, it has broken it. Break of structure is break of structure. Carry your other block. What happened? The market came back there. I saw fair value gap telling me that, okay, the market will surely come back there. Market tap here, we make profit. If you like, make it they use 20, 22 words. No concern me. We are trading the same thing. Winstar Forex. AK trader. Do you understand? AK trader. See,
Yes.
look at.
Yes.
Can you see that there's a break of structure? Carry the other block. What happened? The market came back there, sell. That is how it is, guys. That is it. Okay. Smart money jazz. Talk. See charts. Can you see charts now? You'll be like, this thing is, what is this? Sure, you want to kill me. But since you understand what fair value gap is, everything that is done, you can see there is fair value gap. There is fair value. Can you see? Do you understand what fair value gap is? You consider first candle, third candle. You consider it to the second candle. Can you see that this one top here, this one, so there's a fair value gap. Which one did he use to trade? He used this one to trade. This is the one we cannot see this one, what he used to trade this one, right? This one we cannot see because he's back that I went to look at it. Do you understand? But this one, like this, we sabi him. Say he used this one. Now, how did you now use this one to trade? He combined fair value gap and other block together to trade it. You see, he has mentioned this as what? As other block. OB means other block. They combine it with this fair value gap. Why is this place called fair value gap? Look at it. This is the third candle. This is the first candle. You see that small dots that is using to say his own fair value gap. Can you see dot?
Yes.
Because are you guys seeing it? Like this is the first candle.
Yes.
He used dot to mark out. This is the third candle. He uses small dot. But everything you are considering to the second candle, and you can see that from year to year there is what gap. And the market has gone down. As the market is coming back up, you understand that the market is coming to come and fill that place. Now, for you to know that the market will come down or you will not feel it immediately, look at it. There is another block that it has formed. There's a break of structure here. This is another block. Can you see? That is what you use to trade this particular trade. That too much edge, too much word, plenty for there. Do you understand? Just know how to analyze market as simple as possible. All these ones that you are seeing, BSL, trend line liquidity, can target it, everything is liquidity. I will teach you that one too. You don't, once I don't know that if I see this thing and this thing, it means it's liquidity. I don't want to know the type of liquidity that it is. I don't want to know. I shall know that if I see this thing and this thing, it means there is liquidity. Do you understand? When we get there, I will explain all the types of liquidity that we have, and I will tell you that just know that once you see this thing, it is liquidity. You don't need to cram it that this is liquidity. You don't need it. Who will ask you that? Let me see your workings. Nobody. Your workings that people want to see is evidence. Are you driving Benz? Are you building houses? Are you buying properties? That's the evidence they want to see. Not let me see what is it buy side you are calling. See this one is calling is just liquidity. They play. Look at my brothers. Can you see that there's a break of structure here? He carry his other block. As simple as that. What happened? The market came back there. Buy, sell, buy. That's just it.
Confirmation entries.
And that is just to confirm that, okay, this is coming. This thing will not come. Do you understand? It's liquidity. I will tell you later on. Now look at it. There's a break of structure here. All this CH that they are writing at them sabi is what? Break of structure. See this one now is calling it IMB. What does IMB means? Imbalance. Can you see this is the third candle, this is the first candle. When we consider it to this one, you can see that there's a lot of space here that the market needs to come and fill, right? And it's saw another block below. So his aim is that the market will come and fill this space, and in the process, it will tap my order block, and the market will go. Did the market do that or not? Bullion charts. Do you see it, guys? So I've shown you as many examples as possible. This is CFX more. So I've shown you as many examples as possible, whether from TikTok, whether from Instagram, and I've shown you it on my chart too. So you now, what will make you to really get this thing, is you to go and sit your ass down and make sure that what you'll be able to replicate all these results. So we have 5 more minutes. Questions.
What's the difference between order block and supply and demand blocks? Okay.
I'm coming. I will try as much as possible to take as many questions as possible, because we are going to do. I will tell you guys to submit your analysis tomorrow. I will create a group, or maybe if you are in one of my group, I will just share the group link so that anybody that is not on the group yet is going to join the group. I will post it on my status. If you are not seeing my status, my number is down. Let me show you this. My number is 081. You can write it down. 081 64 66 97 07. 081 64 66 97 07. This is it on the chat. This is it. So this is so please message me, because I want to take everything once and for all. I have some community managers that I'm going to employ, so that everybody will just be looking at, because you guys are plenty. We are 56, so we'll be looking at it as you are sending, we'll be checking it. So this is my number. So I will send the group link to my status tomorrow so that everybody can join. Now, your first question. Your question is that what is the difference between supply zone, demand zone, and order blocks?
Yes.
What does supply? Thank you very much. When we say supply zones. Now, thank you very much for that question. What is the do you understand what demand means? Demand. When we say something is in high demand, so like something is in demand, it means that the price of that thing will be high, because a lot of people are demanding for that product, right?
Okay.
Right? Do you understand what demand is now, right?
Yes.
So it means that place, once price get there, the price of that thing, if demand zone is $5, if price comes to that $5, price is going to shoot up. Why? Because a lot of people are demanding to buy that thing at $5.
Okay.
Do you understand? So the price will shoot up, because once the price gets to that $5, the seller can say, no, I'm not selling for $5 again. I'm selling for $10. And since the people are plenty that want to buy it, what will happen? Everybody will just buy. Do you get? So the price will go up. So price that is $5 is now seen at $10. That is demand.
Okay.
Do you understand? So demand, we use it to long the market. We use it to increase the price of market. So now, you two, tell me, what are the example of demand zones that you know? Number 1, support. Once market get to support, will it go up or not? Do you understand?
Yes.
Hello. So to retail traders, support is a demand zone. Are you feeling me?
Yes.
Now to SMC traders, example of demand zone. You to tell me example of demand zone to SMC traders.
Bullish order block.
God bless you. That's just it. Bullish order block. Do you understand now? Now let's go and look at that. I see the one that is saying demand zone, supply zone. Oh, Kai. Who is that person that is saying demand zone, supply zone? Look at it now. Opposite of bullish order block is what? Bearish order block. Opposite of demand zone is what? Supply zone. Can you say bearish order block or what? Supply zone.
Zone, okay.
Do you guys get it now? Now, supply, let me explain how supply is. 10 people want to buy a sachet water. 10 people want to buy a sachet water. And all of them are holding 10 naira. But now, we now have 100 people that want to sell the pure water, and the pure water will expire tomorrow. If me that I want to buy, I say it's 1 naira that I have. Half bread, is it not better than non-bread?
It is.
What would the person say? Just give me the money. Meaning that what if there is a lot of people that want to sell one particular thing, what will happen? The price of that thing will drop. That's why you see all these Aba made clothes. All these bend down and select clothes, they are cheaper. Why? Because there are plenty and a lot of people are selling it. Go and buy Ramanjago clothes. You know, Ramanjago clothes now is the only one that is selling, or Ashlock's clothes. Do you understand? You know, those kind of things are brand, like there are not plenty that are selling it. So they can take the price as high as possible. Do you understand? So price higher. That is your supply zone. Are you getting me?
Yeah.
So to a retail trader, example of supply zone is what?
Resistance zone.
Is resistance, because that place is where people want to dump from. This price don't get it. Let me just quickly dump. As to SMC trader, example of what? Of
Of supply zone.
Is what? Bearish order block. Yes, it's bearish order block. Do you understand now? Now, I want a smart student. Based on what I've taught you, I want a smart student. What is an example of supply zone and demand zone to that you know?
Like during fuel scarcity.
Sorry, I will soon end the corner. So nobody can answer me. The answer is
During
premium
fuel
and
scarcity.
discount zone. Premium and discount zone. At premium. No, I'm asking that based on what I've taught you guys, like example of demand and supply zones that you still know. Is what premium and discount zone. Now, a premium zone now, is it a supply zone or a demand zone? A premium zone.
Demand
Supply
zone.
Supply zone.
Is a supply zone. Is a supply zone because you want to sell at that particular place.
Yes.
Do you understand?
Yeah.
Yes.
So for a discount place now, is a what? Is a demand zone. Do you now understand what supply and demand zone is now? And Captain
Yes, sir.
John?
Yes.
The person that asked the question.
Yes, I understand now.
So that's it.
That's a
One last question. Yeah.
For the fair
So
value
I'm
gap.
coming. Someone asked that. Can we use? I'm coming. Someone asked that. Can we use order blocks to trade the news? Of course, but we've not gotten to fundamental analysis. Let me just tell you the key points in fundamental analysis is that you don't trade before the news come out. You don't trade before the news come out. You react to the news, because let me show you something. You guys want me to be digressing Chrome. So there's something we call Forex Factory. So in that Forex Factory, what you are going to see is just, you need 3 things to trade the news. You need 3 things to trade the news. If you are seeing anybody that is trading the news before the news comes out, they are using technical analysis basically, and also they are risking the amount they can lose, because fundamental mad past technical. Because fundamental is what is happening currently, technical is what has happened in the past, and anything that has happened in the past, we can correct it in the present. Do you understand? So that's why it is more fundamental is more reliable than this thing. If you see white, it means there is holiday. If you see orange, it means that it's just a medium volatility. If you see yellow, it means low volatility. Do you understand? If you see red is high volatility. Do you understand? Let me see if I can see it. You guys want me to be guessing. Network
We cannot hear you.
We are looking at this one now. This red now. Red is what? Red. Red is high impact news. Red is mad. We have an example of red impact news. High impact news that is showing red. We have FOMC, CPI. I don't want to be bombarding you. If I'm bombarding you now, you'll be derailing. But let me just quickly explain to that person. Now look at this. This CPI news have not come out. It will come out on Wednesday, 28th of August. Now, it's only 2 things you need, you will see. Whereas, now 3 things you need. Actual. Do you understand? So, previous is what has happened in the past. Forecast is what people are saying. You understand? So, now, you will now wait till the actual come out. If the actual is 3.4, it means it's what people are actually anticipating. So, the market, the news will not really move. Do you understand? So, but if people are now seeing like, let's say, minus 2.2, that's a shock because the gap is very wide. That's a shock to the market. The market will dump massively. So once you see that you will be updating. Once you see that it has been dropped like this, you look into the forecast. What is the interpretation? Then you go and look for what to short. Maybe you short it or you long it. Do you understand? So you react to the news. And what we use to, as you've said, you don't just FOMO enter. You can use fib retracement, you can use order block, you can use support or resistance. Do you understand now? The person that asked. Okay.
So we technically make an analysis and use the forecast to react to news, right? Based on analysis.
Yes. Actually, that's just it. Oh yeah, next question.
I want to ask a question about the fair value gap.
Go on. Fair value gap, yeah.
Do we consider candles of the same color? For example, do we consider green
No. No. You don't consider. Do you understand? Okay. You don't consider it. Look at this one now. Look at this one. This particular one. If I want to consider first candle, second candle, third candle, just make sure you are considering 3 candles. Then you relate first and third to the second. You can see that this one, the market is actually, let me delete this thing. The market is balanced here. Can you see? I want to relate this third candle to can you see that the market is balanced here? Right? Yeah. Right? Now let's consider this candle now. This candle, and this candle. This one is stopped here. This one is stopped here. Right? The market is doing its thing, but just know the market is coming to come and feel it. Can you see that the market is coming to feel it now? Can you see? So this one, I'm in profits like this. I'm in my profits. I'm enjoying my profits. Do you understand? Because that's where the market is coming. Are you getting it? So you don't need to consider candles. So whether it is green, it is blue, it don't concern you. Do you understand?
Yeah.
Next question. Next question. The last question.
I have a question.
Okay.
Good evening, sir.
I have a particular order block.
I'm coming. Let's edit Snow talk first before most bits. Oh yeah, what's your question?
My question is, if we have mapped out an order block, then one of the candles have tapped the other block and we are in profit. And peradventure, there's a change of character. Probably the candle start coming down. Is that order block? Are we still going to leave it as a valid order block, or we just cash out and wait and look for another order block?
Thank you very much. There's something we call confirmation entry and risk entry, then refined entry. That's entry actually. Do you get? So let me just tell you. The thing is that there are some things, once you see it, you see like, okay. The thing is that if you make your profits in the first place, just cash out and come out. Do you understand? But if the market did not pick you, like let's say you missed it, you can say, okay, let me wait for a confirmation entry. That is, let me wait for the market to come back to that place, and the market should sell, should buy or do anything you want to do. Do you understand? So it's two things. You see that at times the market will respect it 2 times. At times the market will respect it once. So it depends. Do you get? But if you see a fresh order block, it's better than if you see the one that it has been mitigated. Do you get? So that's it. So guys, I'm enjoying this my profit too. Let's see what this thing have fun. So that's how it is, guys. Do you understand now? Do you understand? The person that asked question. Oh yeah, the next person should ask.
Yes, I have a question.
Good evening, sir.
Yes,
I wanted to ask 2 questions.
Okay, sir. Yes, my question is that I noticed that most of the examples.
Okay. Wait, JJ, please wait. Wait, JJ. Oh yeah, must be.
Thank you, sir. I wanted to ask 2 questions. The first one was that for
Okay.
this SMC strategy, what of currency pairs that are not this volatile like to BTC? Would this same strategy work on those currency pairs? Because I noticed near USDT, it has not been moving past the support zone since yesterday. I didn't check it today, sir. Then my second question is, how do you maximize profits with SMC? Because I see you are targeting the next let me say resistance or support when you place the trade, but there are sometimes that it will cross. Maybe if you target it, it is 1 to 3. Risk reward is 1 to 3. But when it goes there, it passes that place and still goes further. And some people get those type of trades as like sniper entries, 1 to 6, 1 to 5. How do you maximize the profit, sir?
Thank you very much. You know, when we were starting our class, I told you a trader and his or her trades. What do I say type of traders? I say we have swing trader and we have day trader. This finger that you are seeing is not equal, right? This finger that you are seeing is not equal. Everybody cannot be the same thing. Do you understand? The person that is catching 1:6 risk to reward, where he's going is very far. Someone that just wants to know 1:3, 1:2, you don't know that, I cannot hold this thing for too long. Do you understand? So it depends on you. You'll be the one to say, okay, I want to be catching this thing for too long. I want to be leaving it just for short. It depends on what you are looking for. Do you understand? So, and I cannot advise you on that place because I don't know the kind of person you are. You might be the kind of person that any small loss, you're already depressed, you're already tired. It's better you just be catching your small thing and go. There are some people that if you beat them, they are... I told you now, I explained this thing for you now. Do you understand? There are some people that they will be on minus $1 million loss for 3 months, 4 months, 5 months, and they will not shift. Nothing will concern them. Do you understand? So it depends on you. That's psychology. Yeah. The second question.
Okay, sir. Yes, I have a question concerning the examples that you gave us before. I noticed something that most of the traders that you showed, they were mostly using like fair value gap with order block and break of structure before taking all those trades. So I want to ask something now. Based on confirmation before taking trade, are those 3 enough confirmation before taking a trade using fair value gap, order block, and break of structure?
They are enough. That's 1. 2 is that they are not just the only one. That's why I've given you all what you need to see. But it doesn't mean that you must see everything in a trade before you can take it. Once you can see 2 or 3 of all those things that I listed out for you, you are good to go. Do you understand?
Yes, sir.
Do you understand?
Yes, and I also have another. Yes, sir. And I also have another question concerning refined entry. You said that we pick the other blocks from the higher time frame. But you know, some traders, there's a way that
that's your point of interest, where you are interested. Yeah.
Okay, sir. They said those traders, like, they pick their trades from a higher time frame.
I'm with you.
But by the time they from a higher, okay, sir, they pick their other block on a higher time frame. But I've noticed that all of a sudden, you see, they come down to the 1 minute time frame to go and pick their entry. How do they refine their entry from the higher time frame of like 4 hours, 1 hour down to 1 minute? Then they'll start getting like high risk to reward trades in such a short
Yes,
time.
now
Short time.
is refined entry now. Is refined entry. But those people too, it's not as if you look at them very well, some of them will eat this thing. They are going to have missed entry. If you refine too much, you'll be having missed entry. Do you understand? You'll be having missed entry. Look at this trade now. You just tap it and see the profits. Did he come back to come and pick those person? No. Look at this one. You see the way you just tap it. The same place the tap it finishes. The way by the time you go to 1 hour, you cannot catch this trade at all. Never. But there are some trades that we will see. Let me look for some. That you will see that the market will feel almost everything. Hey, look at this one now. If you pick 1 minute time frame, of course, it's going to pick you. And before the market even leave your point of interest, you are in profit already. So don't over refine. Don't over refine. That's why I told you that my lower time frame is always like 15 minutes. 15 minutes, 30 minutes. That's my lower time frame. That's where I refine reach. Do you understand? Higher time frame, 1 hour, 4 hours. So
okay, sir. Thank you very
have
much.
I answered your question?
Yes, sir.
So thank you very much, everybody. I will send the recording to the class. Make sure you watch it. Then tomorrow, you guys will send your what? You guys will send your work to a group. I will send the link to my status. If you don't have my number, group already.